What's up, everybody? Welcome back to Toya Talks Real Estate, where I help you understand all things real estate. And I know it's been a while, I've been missing in action, but I'm back. And in today's video, we are going to talk about this new Bank of America down payment assistance program. So Bank of America has just released a loan that is known as the Community Affordability Solutions Loan, and it's primarily geared to help those in Black and Hispanic communities. According to the National Association of Realtors, Blacks and Hispanics, they have a lower home ownership rate than their white and Asian counterparts. Each state has their own percentage rate, but in Florida, whites who live in Florida, on average, 75% of them own versus renting. And Asians fall closely behind, like around 73 to 72%. Whereas Blacks own 49% and Hispanics own around 52%. So there is a huge home ownership disparity there. So Bank of America has presented a program that's like, okay, I'm going to help you guys get to home ownership. So no down payment, no mortgage insurance, and no closing costs. However, the program has its constraints, right? It has its criteria that you have to meet. You have to live in certain neighborhoods. The neighborhoods that you have to live in is Charlotte, Detroit, Dallas, Los Angeles, and Miami. And instead of focusing on your credit score, because a lot of us have issues with credit and we do not qualify for the traditional mortgage lending process. So this program does not review your credit. However, they focus on other means of proving that you're able to pay back something, you're being financially responsible. So that would be your rent, that would be your utilities. They're going to look at things like that, okay? Your phone bill, those are still mechanisms that they use to show like, okay, this person can pay something. You know, they're responsible in some way. We can't just fault them for their credit score right now because life happens. And they're also not looking at any mortgage insurance. So people usually have mortgage insurance factored into their mortgage payment. So you get mortgage insurance when you put less than 20% down. Okay, so the bank is already giving you the loan to buy the house. But if you put less than 20% down, they're taking more of a risk. So they feel like, hey, we have to charge you another fee on the side just in case you default. But with this program, they're not even including that mortgage insurance. So y'all know me. Y'all know I'm gonna keep it real with y'all. When it comes to these down payment assistance programs, like I've mentioned in my previous video, there's no such thing as anything free. I want everybody to get that in their mind. There is ain't nothing free in this world, okay? You either gonna get it on the front end or the back end. We live in a capitalist society. Everybody has to understand that before we move further, okay? So if you have that understanding, then you can be able to look at the pros and cons of the program and be able to make the best decision for you. But keep that in mind. They're taking on a major risk by giving you a home and fronting the down payment assistance, fronting the closing costs, and not giving you no mortgage insurance. So this has risk written all over it, right? With that in mind, you have a major bank offering you a very risky loan program. So let's look at the benefits first, right? You do not have to worry about coming up with such a large down payment amount. A lot of people, especially with rent being so high, you can't afford to save. You know what I'm saying? So it's going to provide that temporary relief to say, okay, I don't have to worry about putting so much money down. Like the home ownership process can already be stressful for some people because of the amount of money that it takes for you to get started. But them fronting those initial costs, that'll take away a lot of that burden, you know, a lot of that stress. On the front end, it look good. But here's the thing. You ever see those ads, especially like when you're buying a car and they say 0 money down, you can come in there and walk off the lot with it, right? I've been one of those people. I've been one of those people. When you're walking into a situation like that and you're not putting any money down, And say, for instance, this is keep using the car situation. I walked into the car dealership, bought the car with no money down, right? As soon as I drove off the lot, I was already upside down on the loan, right? A car starts depreciating as soon as you drive it off of the lot. Okay, and then, as the years went on, I owe more money on the car than what the car was worth. I'm not sure if y'all follow me here. Okay, so whenever you use a down payment assistance program, you have to understand that you could potentially owe more on the house than what it's worth, depending on what happens with the market. Or not even, let's just say what happened with the market out of it. You're still walking into the house with no equity. Traditionally, when people put money down, either they put the 3.5% down or 5% down or 20% down, like they're already starting off good. They're already starting off with some equity in the home. But when you walk in there and you haven't put any money down, and we go into a recession in 2023, you owe more on the house than what it's going to be worth at that time. And then if you already come from a background where you've struggled to even save to make a down payment, right? You're already coming from a background where you're struggling financially. So even if you wanted to make extra payments to kind of catch up or just to kind of knock down that loan, you're not coming from that space already. So it may be difficult for a lot of people to catch up. But mind you, let's not make it all bad. Real estate is a long-term investment. So it don't matter what the market do. If you're getting into it for the long haul, the market can go up and down, up and down, up and down. You should always put yourself in a position to afford that mortgage, no matter what the market is doing. I don't care if this market go, we in a Great Depression, whatever. If you get a mortgage and your mortgage is let's just say $1,000 hypothetically, and you can pay that $1,000 easily, you're not struggling to make it. If something were to happen, like you can still make ends meet, then I always say like, okay, well, you good then. If it puts you in a position, if something were to happen, you were to lose your job, you can't keep up with the payments, and the taxes, they're going to increase. They're not going to stay the same. You have to really assess what you can and what you cannot afford. The program has location and income restrictions. So you cannot make make above a certain income. If you're already on the path to saving money, consistently saving, everybody's income is different. So I can't even say a certain amount. But if you've disciplined yourself to say, you know what, I'm going to save $100 a week. You've already conditioned yourself, moved yourself to a financially, stable mindset, right? You have a stable job. You're going to be in that area for the long haul. Like you really, invested in your community. You really want to build it up. Like if you use those basic criterias before you purchase a house, then you should be fine. You know what I'm saying? And these programs may not be as bad. But always know that there's a catch. There's always a catch. There ain't nothing free. Bank of America and all these other companies, remember, this is a business. They still have to make their money. So they're going to make their money on the front end. They're going to make it on the back. So either that down payment assistance that you didn't come up with, or that closing cost that you didn't come up with, it can either be a second mortgage. They can put a lien on a property and say, hey, you have to stay in this house for 10 years. Or 15 years. You can't move anywhere. This has to be your primary residence for that time, right? And if you move prior to that, you got to pay some of this money back. They got programs like that. They give you the money though. They helped you out. They're not just helping you for no reason. Read the fine print of the program. Don't just disregard it. It can really truly help people out who may not have that money up front, who really want to invest in their community, see it come up. You know what I'm saying? And they're giving everybody a chance to do that. But also read the fine print. Set yourself up financially to be able to pay that loan down. You know what I'm saying? Put equity in the home. You may have to fix it up. You get what I'm saying? Also look at the other homes that's in the neighborhood that you're looking to invest in. Look at the other homes around it. Be smart about it. And this is not just geared towards Bank of America. I know that, a lot of people can really utilize this program and really help them out. But when it comes to any down payment assistance program or any type of program where they're saying that they're going to help you out and you don't have to pay anything, just like that car example that I used earlier, listen, if you are not already in a financially sound state of mind, you're going to get caught up. And I don't want y'all to get caught up. Okay? I don't want y'all to get caught up. So, with that being said, one of the programs, they're here in Miami. So if any of you are looking in the Miami area, the South Florida area, and you guys need a realtor to assist you, I'm your girl. And so with that, thank you guys so much for watching this video. I appreciate you taking the time out of your busy day to sit down with me and to learn more about this down payment assistance program. And I look forward to seeing you in the next video. Have a good day, guys.